His name was Bruno Iksil. Traders called him the London Whale because his positions were so massive, they moved entire markets. He worked for JPMorgan Chase, the bank that survived 2008 looking like a hero. 4 years later, one trader would cost them over $6 billion. This is that story. Iksil worked in JPMorgan's chief investment office in London. The CIO's job was supposed to be simple and boring: manage the bank's excess deposits, invest conservatively, hedge risks, protect the balance sheet. Instead, the CIO became a profit center, and Iksil became its star. He started making enormous bets on corporate credit derivatives, specifically on an index that tracked the creditworthiness of major companies. The positions were supposed to be hedges. They weren't. They were directional bets, pure speculation, and they grew and grew and grew. By early 2012, Iksil's positions were so large they were distorting prices in the credit derivatives market. Other traders noticed something strange. Prices were moving in ways that didn't make sense. Someone was pushing them around. Hedge funds on the other side of the trade realized they had a whale to hunt. They started betting against Iksil, knowing his positions were too big to exit easily. In April 2012, Bloomberg and the Wall Street Journal broke the story. London Whale became front-page news. JPMorgan CEO Jamie Dimon dismissed the concerns publicly. He called it a tempest in a teapot. Weeks later, he wasn't laughing. The trades went catastrophically wrong. As the market moved against Iksil, losses mounted faster than anyone expected. $2 billion, then $4 billion, finally over $6.2 billion. JPMorgan, the bank that lectured others about risk management, had lost control of its own trader. Dimon called it the stupidest thing we've ever done. The London Whale became a symbol of everything wrong with too big to fail banks. Regulators circled, executives testified before Congress. JPMorgan paid over $1 billion in regulatory fines. 2 of Iksil's colleagues were charged with fraud for hiding the losses. Iksil himself cooperated with investigators. He was never charged. The lesson was painful but clear. When your bets are big enough to move markets, you're not hedging anymore. You're gambling, and eventually even the house loses.